Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. In the last 24 hours, the Australian dollar's bearishness intensified as a potential flash crash drove the market to a fresh 2024 low around 63.40.50 before a significant bounce following the triggering of stop losses below the 64.75 level. Meanwhile, the US dollar index fell from 103.22 to 102.70 following Friday's weaker job report, and disappointing manufacturing construction figures earlier in the week have raised concerns that the Federal Reserve's high interest rates might be slowing the economy more than anticipated. After leaving rates unchanged, Federal Reserve Powell highlighted progress on inflation and hinted at a possible rate cut in September, while traders are now betting on a 50 basis point rate cut at the meeting in September, with some speculating about an emergency cut outside the regular meeting cycle. Looking ahead, the Reserve Bank of Australia is expected to maintain its cash rate at a 12-year high of 4.35% today at its meeting. Additionally, the RBA governor will be speaking on Thursday as well, where audience questions are anticipated. So turning to the technicals, the RSI has bounced since showing divergence may give further upside potential, and from a break of 65.45 should ignite a move on to 65.70 and on towards 66.45.90 as a possible target. Traders should also still remain cautious, monitoring signals closely and adjust risk management accordingly due to the recent high volatility that we've seen over the last 24 hours. Talking of high volatility, we can see that the euro dollar stabs at the highs of 110 and retreats. Nevertheless, the dollar index did drop to 102.70 from 103.22. And with further weakness on the horizon, should see another retest to that topside level around 110 figure 10 that may extend on to 111, with any weakness likely to find support around 109.20 and firmer at 108.70. Also overnight, the Japanese yen showed further strength and rebounded off its call of 142 and now looks for a potential recovery as the technicals are firming up, which could see a move on to 145.5 to 146 and reassess from there. In other markets, Japan's Nikkei plunged more than 12%, marking its worst one-day decline since the crash from Black Monday in 1987. With the whipsaw market right across the board, still be on your guard. Even though opportunities may present themselves, traders should continue to adjust their risk management strategies, given how whipsawed the market is. Sterling outlook still remains whipsawed and presently is attempting to recover, and therefore may see a rise on to 128.10 to 128.60. Given the foul downside attempt, it's likely to limit the market and therefore finding support around 127.45 to 65. Very whipsaw price action when it comes to gold as the market plummeted through 2,400, briefly recorded a low around 2,360.70 and then staged a significant bounce. In light of how the market's performing, further whipsaw price action is likely, and we shouldn't rule out further down tests towards this level around 2,358.62, and along with that, the broader call still holds at 2,500. So therefore, it may be a little bit difficult to trade, but still keep an eye on this uptrend and likely to provide support for the market that should keep the upside level around 2,500 intact. But the technicals are weighing a bit heavy, hence why I still feel that we could see another down test to the bottom side before seeing the rally. And wrapping up with oil, the market took a challenge to the downside and finding support around $71 a barrel and posted a Japanese hammer, but a weaker one. Nevertheless, that could see further gains if we see a break of 74.10.15. That may lead on to $75 a barrel and reassess, with any pullback still likely to find support around that bottom side of $71 to $72 a barrel. But as I mentioned, with all the markets, given the high volatility, traders should continue to closely monitor signals and adjust their risk strategies accordingly. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report, and I hope you enjoy the great start to the day.